Hi, everyone. My name's Jessa Coleman. I work with Pace Financial Servicing. Adrian Janes of INCOG is going to be opening this presentation, but for those of you who are joining the webinar, as you join, just be aware that we have muted all participants, and we will unmute you if necessary, but that shouldn't be needed. We do have a chat box that you're able to use if you need to make a comment.
Hi all, thank you so much for joining us today. We really appreciate you all taking the time to learn about CPACE. My name is Adrian Janes. I'm from INCOG. And before we get started, I want to make sure you all know this webinar is being recorded. We will make it available as well on our website if you know of anyone who wanted to be here today but couldn't be. So thank you all for joining. And we're so excited that you're joining us today for the launch of this webinar series as we prepare to launch the Oklahoma CPACE program this fall. My name is Adrian Janes. I'm the Energy Program Coordinator with INCOG. And so this webinar, as well as the program development for CPACE, is facilitated by INCOG. So as we go through the webinar, please feel free to type your questions into the chat box and we will answer them all at the end. If you're unfamiliar with INCOG, we are a voluntary association of local and tribal governments in the Tulsa region, and we work together to provide planning and coordination services to create solutions to regional and local challenges such as comprehensive planning, transportation, community and economic development, environmental quality and energy programs, as well as programs for older adults. So with that, I'd like to introduce our main speakers for today. It's Jessa Coleman from PFS, and with that, I'll hand it over to Jessa. Thanks so much for being here, Jessa.
Thank you. Again, my name's Jessa Coleman and I work with a company called Pace Financial Servicing, also called PFS. PFS is a private company that focuses on CPACE programs nationwide. All that we do is design and administer PACE programs across the country. We currently administer CPACE programs in Maryland, and we also support the administration of a CPACE program in Virginia. And then INCOG has asked us to support them in their efforts to design and implement a statewide CPACE program here in Oklahoma. So with that being said, I will move on to explain to you what CPACE is, just to set the foundation for those of you who are maybe only just learning about CPACE on this call. So CPACE stands for Commercial Property Assessed Clean Energy Financing. It is a government policy that says that commercial clean energy projects, and also in some cases resiliency projects, are a public benefit in the same way that improving a sewer, a road, a sidewalk is a public benefit. That being the case, these improvements to private properties can be facilitated by the local government through an assessment in the same way that the local government would facilitate similar improvements through special property assessments. So the way that CPACE financing works, it requires several steps to make it available in a given state or even within a given county. First, the state has to pass legislation explaining or allowing for CPACE in that state. Oklahoma has passed such legislation, and we'll touch on that a little later in this presentation. Then each local government that wishes to have or offer a CPACE program needs to create an energy district or pass an enabling resolution that will allow for CPACE within their county. After the state and local governments have passed legislation allowing for CPACE financing, a building owner within that county would then develop the project that they want financed. They would select a capital provider to provide that financing. And once the borrower and the capital provider have agreed to the terms of the assessment, it will be recorded in the land records. The assessment will be recorded in the land records securing the financing. So like other public benefits, CPACE projects are secured by the building that they benefit through a special assessment. What that essentially means in layman's terms is, let's say that you're a property owner that wants to install a new HVAC system, as well as replace the windows in your building with windows that are more energy efficient than the ones that are there already. And the total cost of financing that project is going to be about, let's say, $800,000. What that means is that you're going to access $800,000 of capital from a private capital provider, and then essentially in the form of a loan. And then there will be an $800,000 special property assessment that is called a CPACE assessment that is placed on your property, reflecting that capital has been provided to you by a private lender. So this is not really a new program. CPACE financing is offered across the country. Special benefit assessments, as we know, have been available in this country since the country was founded. CPACE as a special assessment has been available throughout the country for about a decade. And there is CPACE legislation active in 37 states, as well as the District of Columbia. And there are now active programs in 22 states, as well as the District of Columbia. And what we mean by active programs is programs where not only the initial state legislation has been passed enabling a CPACE program, but where a program has actually been launched and is operating in at least one county or other jurisdiction in that state, right? So you can see here on this map in Oklahoma, the colors aren't great, but this Oklahoma is shaded in with a color representing that it's PACE enabled. And we actually should update that because there is a program in development, right? That's what NCOG is working on right now, and what we're going to talk about during this presentation today. So not to bury the lead, but we expect to have an active CPACE program that will allow borrowers in Oklahoma to active CPACE financing in the state by the end of this year. So let's show a little bit more in terms of how that transaction structure looks. From project origination to repayment. At this point, the CPACE assessment really looks and feels a lot like any other commercial loan that a property owner is going to access to improve their property. Commercial property owners apply to CPACE financing, which will allow them to fund up to 100% of all hard and soft costs associated with eligible improvements to their property. Eligible improvements here in Oklahoma are going to refer to improvements that improve the energy efficiency of that property, that improve the resiliency of that property, or that improve the water efficiency, the water saving measures of that property. So the program here in Oklahoma is going to be a pretty flexible program in terms of what types of improvements to the property can be financed. Once a property owner has developed the project that they would like to finance through CPACE, they will reach out to private capital providers to provide that financing. This will be an open market program, meaning that capital providers, meaning that borrowers will be expected to shop around for a capital provider and select to work with the one who offers them the best or the most attractive terms, in the same way that a property owner would research and select their own mortgage lender, right? And once that property owner has selected a capital provider to work with, and those two parties have agreed upon the terms of the assessment, funds will be dispersed. At that point, a couple of things will happen. A qualified contractor will be selected who's going to install the project. And once all of these project parties have been selected, then an application for CPACE financing is going to be proffered to the program. And upon approval of the project, the county will levy an assessment, a CPACE assessment on the property. And that assessment will be billed by the capital provider and repaid directly to the capital provider each year, right? So the loan transaction itself between the property owner and the capital provider is going to look like any other loan. The terms will be agreed upon between those two parties. The capital provider is going to bill and collect the payments themselves, but this CPACE assessment will be placed on the property by the county, right? And if, as with any other property assessment, if that property is sold before the assessment is fully repaid, then that assessment is going to transfer to the new owner of the property, right? And that new owner will continue being responsible to make the payments as outlined in that payment schedule until the original assessment has been paid off. So there's 4 primary parties involved in this process. We have the capital provider, the property owner, the program administrator, and the local government. The first entity here that I want to talk about is the capital provider. As we've already discussed, they are the entity that is providing the financing for the assessment, that is billing and collecting the assessment payments each year, and that is enforcing the payments in case of delinquency. Now, once a property owner has selected this capital provider, that property owner is going to submit a project for approval to the program administrator. The program administrator works on behalf of the local government to review and approve applications for PACE financing. Once the program administrator in a given transaction has reviewed and approved the project, then they will, of course, recommend to the local government that an assessment, a CPACE assessment, be placed on this project to reflect that it is an eligible CPACE project. The local government has a very limited role in this structure beyond adopting, I apologize, it says ordinance here, but it's actually a resolution in Oklahoma, but beyond adopting a resolution in Oklahoma to establish the CPACE program and appointing an administrator. And then, of course, helping to ensure that each each CPACE assessment for each transaction is recorded in the land records. There will be an assessment contract for each CPACE transaction. This assessment contract is really the document that I would say sets CPACE apart from other types of more traditional financing. While there will be an individual loan agreement between the capital provider and the property owner, just as with any other commercial loan, in a CPACE program, for each CPACE transaction, you have an additional contract that is executed. And this contract is unique because it is executed by 3 parties. It is executed by the capital provider, by the property owner, and by the local government that has enabled the program. And this is the contract that will outline the roles and responsibilities of each party vis-a-vis this CPACE transaction that's being entered into. So that's a little bit of the nitty and gritty of how CPACE financing works. But I think what most of you on this call are probably really interested in is the benefits of CPACE financing, right? Why do we need this whole more complicated transactional structure? Why can't we just offer, why can't these CPACE capital providers just offer a loan like any other bank would offer a loan for a improvement to a property? Well, essentially, the structure that I have outlined here allows these CPACE capital providers to offer terms in the financing that they wouldn't necessarily be able to offer for a more traditional commercial loan. So that's going to result in these benefits that I'm going to outline here. What CPACE was really originally designed to address was it was really designed to address a problem for property owners who want to improve their properties. They know that improving their properties by making the property more energy efficient is going to save them money in the long term, because they're able to reduce the amount that they spend on their utilities. But that initial outlay of capital is incredibly prohibitive, right? So let's take the example of a $2 million project that's being used to replace older broken energy and water systems. The owner of this property knows that when you look at the 20-year period, this is a no-brainer of a project. The project's expected to save $5.6 million in energy and water savings over the system life, despite the fact that it only costs $2 million of upfront investment. The annual savings are expected to be $320,000 for this project. This is an opportunity to hedge against rising energy prices down the line. And you know what? This equipment that's being replaced needs to be replaced. It's end-of-life equipment. The HVAC, you've been told by your contractor that the HVAC's gonna break any month. So like I said, this is a no-brainer. Why then would a property owner not invest in this project? Well, the first half of this graph, or the first quarter of this graph, the first 5 years here displayed, this is the reason, as I'm sure those of you that are property owners or developers on this call know, why these projects are often prohibitive. Even though such a project is expected to repay itself over the lifetime of the improvements being financed, there is this initial upfront outlay that puts the property owner net negative in the first 5 years, 7 years, 3 years, whatever it might be. So there's a question of where will you get the funding, right? You know it's a great project, but you don't have $2 million cash on hand, or you want to invest those $2 million in more revenue accruing aspects of your business. You don't want to invest it in your building. Or maybe you do have the cash on hand, but you have an internal financial policy that you only invest in projects that have a 3-year payback cycle, and this project's looking at a 5-year payback cycle. These are all the sorts of questions that might come up that might prohibit a property owner from providing this $2 million of capital to invest in this project. Well, CPACE solves that problem, right? So we have here a comparison of this same project, the $2 million project, paid for through cash, through a traditional bank loan, or through a CPACE assessment. Obviously, if you're paying for this project cash up front, that's great because there's no additional fee or cost in terms of interest. However, that's $2 million that you need to have as a property owner on hand that you're not going to be able to invest elsewhere. And even though you are getting $320,000 of energy savings out of this investment, within 5 years, still you won't even have been able to recoup your investment entirely. It's going to take you about 7 years to achieve that. Now, with a bank loan, you get this competitive 4% interest rate. You have to make a down payment, so there is still $300,000 that you need to have on hand up front to be able to to be able to access this financing. And this loan needs to be repaid over 5 years. Well, in this scenario, your annual payment is going to be about $380,000. Again, the expected energy savings haven't changed. You're looking at $320,000 in energy savings. But so your net annual cash flow is still going to be negative at about $60,000 a year. Let's look then at the final scenario, which is a CPACE assessment. With the CPACE assessment, there is no barrier in terms of needing to have the cash up front for a down payment. CPACE allows for 100% of all eligible funding to be covered by the financing. The term in this case is 20 years. And even though the interest rate is a bit higher in this scenario at 6.25%, because that repayment is being extended over this 20-year period, the annual payments are significantly lower. So in this scenario, the annual payments are $180,000 with annual expected energy savings of $320,000. You as a property owner walk away with $140,000 extra in your pocket from the very first year without having expended any of your own money up front. So this is the type of scenario that I think illustrates very well why CPACE is an attractive proposition for those who are interested in investing in their properties. So we have a number of benefits listed here for property owners. As we just showed, these projects frequently result in day one payback. It's $0 down financing. The repayment terms in the example I just showed you extended up to 20 years. Here in Oklahoma, per the state legislation, we're going to be able to extend up to 30 years on these loans. The interest rates are competitively set and they are fixed over the entire term of the loan. So you know exactly how much you'll be expected to pay every year. That's particularly attractive for those types of property owners that might run businesses that have fluctuating revenues. Additionally, this assessment is secured by the property itself. It is not secured in any means by the actual property owner. What that means is if you're perhaps a non-traditional borrower or you have a small business and not a very large credit line, if you're sitting on a valuable property, the value of that property is going to be taken into account in terms of how much financing you're going to be able to access through CPACE. So this could be as well a very attractive financial mechanism for non-traditional borrowers or those who might struggle to find financing elsewhere. As I mentioned previously, the obligation transfers with the building. So this is very attractive for those developers that purchase buildings, flip them, and resell them. Even if you're going to sell this property in 5 years, in 10 years, etc., you are only obligated as the initial borrower and owner of the property to make payments for the period of time that you own the property. So again, once the property is sold, those payment obligations transfer to the new owner. And finally, this financial structure very typically is used to solve sort of landlord-tenant challenges when it comes to improving a building. Because the CPACE financing is legally an assessment, it can often be included in the list of taxes and assessments that are passed through to tenants when there is a triple net lease scenario between landlords and tenants. So that sort of solves the problem of why would the property owner want to pay to improve the building when they're not the ones immediately benefiting from those improvements, at least in terms of their day-to-day comfort in the built environment. With this scenario, while the property owner is the one that needs to apply for and access the financing, the tenant is the one who will benefit from the improved built environment, and the tenant is the one who will make those annual payments, assessment payments, through the transfer of those payments in a triple net lease scenario. All right, and then I want to point out just a few specific benefits of CPACE for those developers that are using CPACE as a component of the capital stack when constructing a new building. A lot of people think of CPACE as something that can only be used to retrofit existing buildings. That's not the case. CPACE is very frequently used as a component of the capital stack for new construction. In these scenarios, it's often used to help fill equity gaps in the capital stack. CPACE is typically about half the cost of mezzanine loans or similar forms of debt. CPACE goes hand in hand with the senior lender. So you very frequently see new construction projects taking on a mortgage lender to finance a portion of the capital stack and CPACE to finance another portion of the capital stack in order to keep mezz debt or equity down, and it drives increased developer returns. CPACE is also a win for local governments. At the end of the day, all of this investment in the commercial real estate is driving job growth, economic development, and clean, efficient energy use. This is a program that is attracting outside investment into communities that offer CPACE programs. It's a tool for business owners to decrease costs and improve the value of their property as an asset. This also means that the local government is improving or increasing its taxable property base. We're promoting construction, particularly in the energy efficiency and clean energy industries, for those local governments or states that might have specific energy standards that need to be met by the built environment. This is a carrot that they can offer alongside that stick, right? So, and then finally, this program covers carries little to no cost for local governments. As I said at the top of this call, local governments are really limited here to enabling a program and selecting an administrator to work with. And once they have done that, all of this activity essentially happens outside of the local government in the private markets. There's a couple other beneficiaries of CPACE I'll breeze through really quickly. One important beneficiary is mortgage holders. Because CPACE financing is an assessment, it sits senior to existing mortgages, to all mortgages on the property. Therefore, it is an expectation as well as a best practice principle and a legislative requirement that mortgage holders consent to the placement of a CPACE assessment on a property for which they do hold a mortgage. Nationwide, hundreds of mortgage holders have gotten very comfortable with this because the investment, the use of CPACE financing to invest in energy efficiency and similar improvements to the property increases the property's value, which is the value of the underlying collateral held by the senior lender. Also, when this is a project that when this is financing that has to be accessed, we're increasing the cash flow for the property owner because we are expanding those payments over such a long term, which means that that property owner is better able to manage its debt service. And then finally, and this is really the most important point for mortgage holders, CPACE assessments, because they are assessments, are not accelerating. And what that means is that the only amount that will ever be due is the amount that is due in a given year or the amount that is delinquent. So in practice, the only portion of the assessment that sits senior to the mortgage holder's claim on the property is that annual payment that's made. For the contracting industry, this is a pretty big win. Excuse me. CPACE is another means by which contractors can secure immediate financing to cover the cost of their services. CPACE financing, because it is 100% upfront financing, helps contractors avoid using their own credit lines to fund projects before they can be repaid by the property owners who are accessing external financing. And it's a way for contractors to unlock projects that were previously locked. So again, because of all of the benefits that I outlined earlier in terms of how CPACE is an attractive form of financing to certain types of property owners, this is an opportunity for contractors to go to property owners that had typically approached them for their services but couldn't afford those services to say, here's a new form of financing that's available in Oklahoma that you can use to fund, this improvement that you still need to make to your property but couldn't otherwise fund. So again, we are broadly speaking just funneling capital into these real estate and construction and energy markets in Oklahoma. For communities, commercial buildings are an energy and water intensive structures, and even modest improvements can result in large decreases in carbon footprint. So this is a great win as an environmental program, as much as it is a win as an economic development program. All right, so now that we've covered all of the basics of CPACE financing, everything that I just described is essentially true across the country for all CPACE programs. What I'm going to describe here is the Oklahoma CPACE program specifically. So what are we doing with INCOG to establish a CPACE program for the state of Oklahoma? Where are we in that process? And how are we going to get to a program launch later this year to make this financing available to property owners here in Oklahoma? So the first thing that I'd like to do here is just set expectations around what a statewide Oklahoma CPACE program is going to look like. The goal here is for INCOG to develop an administrative platform that will work for any county in Oklahoma that chooses to establish the program. So what we're trying to do is we're trying to take as much effort off of the backs of the local government to be able to provide them with all of the underlying documents and legal work that's required to develop a program, so that they can simply stamp off on the program and quote unquote opt into it by passing a resolution. As we develop this program for Oklahoma, there's 3 primary goals we want to stick to. The first goal is to keep the program low cost and simple. Programs that are simple attract more business, and programs that are simple also help keep program costs down. Programs that are low in cost when it comes to, program fees or anything like that, again, are going to make it easier for property owners to actually use this program, and therefore increase the overall reach of the program in Oklahoma. We also want to keep this program open. Open markets allow for competition, and competition allows for property owners to secure the best terms from capital providers. It allows property owners to select the most efficient and the most skilled contractors. So keeping it open is a key tenet of this program, and then keep it standard as well. So although every individual county must opt into the program, we hope to design a program that all counties will hope to opt into as is, meaning that the rules and guidelines that govern the program will be the same across the state. Keeping those rules and guidelines the same across the state make the program, yet again, to go back to the first point, simple, easy to understand, and accessible for property owners, contractors, and capital providers that are active across Oklahoma, right? Whether they're in Canadian, Comanche, or Tulsa County. So where are we in the process of developing this program? As I stated, the first step that needs to take place is that the Oklahoma legislature needs to pass legislation providing for CPACE in the state. Now, this might be a bit surprising, but the legislation allowing for CPACE in the state of Oklahoma has actually existed for several years. However, extensive amendments were needed to that legislation to perfect it so that we could most effectively achieve all of the goals that I outlined on the previous slide. And I'm very excited to be able to say that we were able to achieve this. The Oklahoma State Legislature passed an amendment to the CPACE law just about a month ago. And it was one of the only bills that was passed by the legislature this legislative session. So that was a huge effort in moving this process forward. And we definitely thank all of our partners and stakeholders who helped us do that. What we're working on now is drafting the guidance manual, which contains the rules that will govern the program. This guidance manual will explain in will explain extensively what types of projects are eligible, how to apply for projects, and what that, again, what are the documents that are used in executing individual CPACE transactions in the state. So we've developed a draft here, and we're now looking for input from the public in Oklahoma on that guidance manual in order to guarantee that this is a program that is really tailored to the needs of Oklahoma's industries. So to that purpose, we are hosting this webinar series. This is the first of 3 webinars. Our second webinar a week from now is going to delve in depth into the contents of this guidance manual in order to elicit specific feedback from the public. So I'm going to share some more information about the webinars momentarily, but we sincerely hope you all are able to join us for that. We are going to collect feedback based on that, based on these webinars, based on feedback from a steering committee that's working with NCOG to develop this program that's representative of a number of different industries in Oklahoma. And by the end of July or mid-July, we'll have gathered all of that feedback and we'll be incorporating it into the guidance manual in order to finalize the guidance manual and also publish the other program documents that are required for this program to operate. What that means is by August, as a program, we should start being able to field applications for CPACE financing and working with counties to enact enabling resolutions. And then the legislative amendment that was passed just recently will take effect in November. I just mentioned some other program documents that we're working on at this time in order to support the operations of the program. Those documents include a template resolution for counties that are establishing CPACE programs. It includes a draft assessment contract, that particular tri-party agreement that I referenced earlier, that needs to be executed for every individual CPACE transaction. Of course, we have the guidance manual, and then there are a number of application materials that will be required, template documents that will be needed for applications for CPACE financing in this program. So again, these are documents that we're going to talk about in a lot more detail in our webinar next week. Here are just some sample application requirements, but what we're really looking at when it comes to, as a program, when it comes to evaluating a CPACE application is, what is the scope of this project, and does the scope of this project comport with the state and local CPACE laws as they have been written? So the type of information that we expect to be requesting with each application is going to be specifically requested in order to demonstrate that a project is legally a CPACE project and that the financing is being used for eligible improvements. Again, this is for next week's webinar. So finally, I just want to briefly touch on 2 case studies. You know, we had the privilege to be involved in helping to pilot the first 2 CPACE projects in the state. These 2 CPACE projects were developed by the Ross Group, a developer that is locally based, and both projects are located in Tulsa. Both are hotels. The first is the Tulsa Club, and the second is the Holiday Inn Express and Suites in downtown Tulsa. These 2 projects were used to sort of demonstrate that the proof is in the pudding. Forgive my trope, but to demonstrate that CPACE can work in Oklahoma, that there is a clear business case for it in Oklahoma. Both of these projects closed earlier this year, and as you can see, between them, these two projects essentially facilitated about $5 million of investment. Both projects used CPACE to fund sustainable design elements such as efficient heating, cooling, plumbing, and lighting systems, and building envelope improvements. So I expect that we will see many, many more similar projects through this program. All right, and then the last thing I want to mention before allowing for some time for questions is to share information about the upcoming webinars. So like I said, this is the first webinar in a series that we are offering. This webinar today was your basic introduction to CPACE financing. Next week's webinar, which takes place on June 30th at 10 a.m. Central Time, not 1. Just wanted to point that out since that's different from the other two. But this next webinar is going to be more of a workshop. We're going to delve into the details of the Oklahoma CPACE program. What are the contents of the guidance manual? Why are those the contents of the guidance manual? What are the rules that we expect to govern eligibility for this program? What are the rules that we need input on from the contracting, banking, and real estate industries in Oklahoma? And again, to, I think, talk a bit deeper about the application requirements and the program, the documents that will be used to govern this program. So I do encourage all of you to attend. And then the third webinar is very different from these two. This webinar is really targeted at local governments. And this webinar will focus on the role of local governments, specifically counties, in this program. So what are the responsibilities that they will be required to take on by enabling a CPACE program? What are the responsibilities that they'll be able to outsource to a third party, such as a program administrator? How can they work with INCOG to progress the Oklahoma CPACE program in their jurisdiction, etc. So unless you're a local government official or involved in economic development, I would recommend that you focus on joining us for webinar number 2. And if you are a local government official or associated with economic development, then I would recommend that you join us for webinar number 3. So, okay, with that, I'm gonna take a breather and switch over to some time for a Q&A. Adrienne Janes and Nancy Graham are both with INCOG. Adrienne, you heard introduce herself at the top of this call. They are the 2 women overseeing the development of the Oklahoma CPACE program for INCOG, and we highly recommend that you keep in touch with them if you're interested in helping us with this program, or if you have questions or comments. My name again is Jessica Coleman, and it's here at the bottom of the page, and my associate Marcus Glomset has also been supporting me in working on this program. We are also actively available to answer any questions that you might have. And again, for more information or to register for other webinars, do please visit www.incog.org/cpace.html. All right, so with that, I am going to ask my colleague, Genevieve Sherman, on the line to share with me some of the questions that have popped up during this presentation. I don't hear her, so I'm going to quickly verify that she is not muted. All right,
Great.
there you are.
Thank you, Jessa. All right. Good afternoon, everyone. Thank you for all of the questions that are coming in on the Q&A and on the chat. We definitely won't have time to have Jessa answer all of these today. So I'll just re-emphasize what she said. Please join us on the second webinar. We also will be addressing many of these questions through a variety of the program documents and other just FAQs and informational documents that will be available through the program over the next several weeks. So stay plugged in this initiative, and then you can revisit that for answers to questions. But Jessa, I'm going to field a couple to you that I think probably a lot of folks would want to know.
Okay.
So there have been a couple of questions about minimum and maximum loan sizes. Is there a minimum size? Is there a maximum size? And how does that get determined?
Yeah, that's great. So one thing that I said previously is that CPACE financing is very, very flexible. I think that's the key here. It's flexible in terms of what can be financed. It's flexible in terms of the types of projects that access it, whether that is retrofits or new construction or even refinancing, which is not something we had time to talk about today. And it's flexible in terms of loan size. There is no upper limit. There is at this time no lower limit either. I would say that most CPACE projects do not go lower than $100,000, and I think even at that point, anything lower than $200,000 is sometimes a bit challenging to secure financing for. However, in terms of larger projects, one of the largest projects that I've seen in the state, sorry, not in this state, but where I work in Maryland, next door in Washington, D.C., there was a new construction of a sports stadium that utilized $25 million of CPACE financing in their capital stack. So again, we're looking about a $100,000 to $200,000 to $25 million range, not being out of the question. And in terms of, sorry, just to say, in terms of how that is determined, which I think was also part of the question, it's the underwriting criteria are determined by the capital providers, but the primary determinant is the total cost of the eligible measures, right? So what are the items that you're installing? What are the hard and soft costs associated with that? And that is going to determine what your upper limit is for a given project.
Great, thank you. So a similar kind of eligibility question. Can you talk a little bit about the types of buildings that are eligible and any property types that are not eligible?
Yeah. So this is something we're going to go into quite a bit of detail in the guidance manual. But remember, this is commercial property assessed clean energy financing. And the way that we define commercial here is essentially buildings that are not single family residential buildings. So agricultural properties are going to be eligible, industrial and manufacturing properties, run-of-the-mill commercial, right, such as office buildings, Main Street businesses, hotels, etc. All sorts of retail is going to be eligible. If a property is owned by a public government, it is not eligible. That is one of the, I would say, big exceptions. And then, of course, single-family homes are not eligible. Religious institutions and nonprofit institutions can sometimes be eligible. The rules there might get a little bit more complicated, and like I said, I think that's something you should look to in the guidance manual for further input on once that's published.
Great. And Jessa, there were a couple of follow-ups that got asked while you were providing that answer.
Yeah.
One was about churches. private schools, and multifamily.
Mm-hmm.
You had any other comments on those?
Yeah, multifamily will be eligible. With private schools and churches, it is possible. We might run into some zoning questions there. Again, these are the sorts of details we're still working on developing, and I don't want to share any information that's wrong or going to change. So for those two types specifically, I would encourage you to just look to the guidance manual once that's published for verification.
Great. Great. Excellent. There are also a variety of questions about sort of who can lend into the program. You've mentioned fee-based capital providers. Someone asked about banks.
Mm-hmm.
Can you talk a little bit about sort of what falls under that term, capital provider?
Yeah. So like I said, this is an open market program in its design, and we want to encourage as much investment as possible. So there are not extensive restrictions under consideration at this time under what types of entities are eligible to lend. I would say that most capital providers of CPACE financing nationwide have historically been specialty capital providers. These tend to be privately owned companies that do nothing but offer CPACE financing nationwide. I do think that recently that has been changing. We have seen some interest from institutional investors in providing this type of financing in the past year. And local banks like community and regional banks are certainly welcome to participate in this program. I would say the one main type of bank that we haven't seen offering much CPACE financing with is the Chase's, JP Morgan's, Banks of America. But that's not because it's not permitted. I think it's been primarily a question of lack of interest at this time.
Great, thank you. Okay, we also have a couple of questions about something you mentioned about retroactive financing or refinancing.
Mm-hmm.
If you could just speak a little bit about what that means and whether that's contemplated to be eligible program and what the look back period might be.
Yeah. So retroactive CPACE financing is essentially a form of refinancing. What it means is that CPACE financing is being used to fund projects that have already been completed and financed through other sources. What that means is that, as Genevieve just said, there's typically a look back period contemplated, right? So you can't necessarily refinance, a project that was completed 5 or 10 years ago. I think that the sort of industry standard nationwide has been about 2 years in terms of a look back period. And that's the type of thing that we're currently considering right now in terms of what's going to be included in as permissible for this program in Oklahoma. In terms of otherwise being eligible, though, I think the main thing here is whatever project is being refinanced does need to be otherwise eligible as a CPACE project, right? So when you apply for retroactive CPACE financing, you will still need to demonstrate that the measures, the improvements that you are refinancing were originally energy, water, or resiliency related improvements to the property.
Great, fantastic. There are some other questions that we won't have time to answer because we're at our hour for now, but thank you everyone for these questions. They're all very good. And I would say for anyone whose questions we didn't answer, most of these will be addressed in the next webinar, which will be more of a workshop format. So I encourage you to attend that or otherwise to just stay plugged in to make sure that you have the ability to receive and know when some of these program guidance documents are actually drafted and posted on the website.
Okay, thank you. Adrian, do you have any final comments? Oh, and I need to unmute you too.
Thanks everybody for joining. If you have not been receiving emails directly from me regarding these webinars and other updates, but you would like to, please shoot me an email. My email address is there on the screen, ajanes@ncog.org, first one there. So please let me know if you would like to be added to our list. So thank you so much.
Okay, thank you everyone. I hope you all enjoy the rest of your afternoon, and we hope to speak with you again next week. Bye.